and we're starting. Here is another year-end planning video because we promised there'd be another year-end planning video. So we're going to talk about a few more items that you may want to think about as we get to the end of the year, right? If you have not watched the previous video that we put out a week or two ago, talking about a number of year-end planning tax items, I'd suggest that you go take a look. What's wrong? Why haven't you watched it? Go watch it.
It's called This Is Us, talking about year-end
That's right.
planning.
Yeah. I completely forgot that was going to be the cool tagline, and I blew it. This is still us, still talking about year-end planning again.
Yep.
The second part, end game. Even though this may not be our last video of the year, we did want to round out a few year-end planning topics that are in our notes. That because we are accountants, we needed a sense of closure, so we had to go back and talk about the rest of our notes.
Yep.
So a few more items to maybe keep in mind. I will tell you that a number of these aren't as big in terms of maybe big ticket or marquee type items like what we talked about before, but they are some things that could be very important depending on your situation. What's the first one?
Yeah, so most of these are just reminders of things to think through before the end of the year.
Whether they end up applying to you or not.
Right. You know, I love to mention virtual currency and cryptocurrency.
I like that turn you did. Like on the news. And cryptocurrency. That was good. Very professional.
Yeah.
Yes, cryptocurrency. Yeah.
So just a reminder that if you are using virtual currencies to pay for goods or services, that's a taxable event because you are converting that currency at that point in time. So think about what your gain or loss on the currency is at that transaction point.
It's not any different really than monetizing or cashing in any other investment. You basically have to true up for tax purposes at that point. It's going to be the same thing with crypto.
Right. There is a special question on the tax return, and I believe it's changed up just a little bit for 2021, where it asks directly if you have sold virtual currency during the year.
Gotcha. Yeah. So watch out for that. Obviously, there are a lot more people in crypto than there were, I was going to say a few years ago, even probably 1 year ago.
Yeah.
So that's something to look out for. Next thing, we talked a little bit about some retirement planning considerations in the last video. That was more geared toward required distributions, but we do have in our notes here just to discuss and to look out for and think about retirement planning considerations at the end of the year, right? Such as?
Yeah. Just maybe reviewing how much you have contributed to date to see if you want to max out whatever vehicle you're using for retirement savings, whether that be your 401k, IRA, Roth. We could also throw in here health savings accounts.
Right.
That's another account that has a maximum for the year. So just to monitor your contributions to date, and there's still some time to go ahead and max out those accounts if you're eligible.
Yeah. Do you want to talk about whether and when you have to actually have something done by the last day of the year versus having a little extra time to do it and still have it count in that prior year?
Yep. Some retirement savings accounts you have until April 15th to make a contribution credited to the prior year. Not all of them. So it depends on what type of retirement account you have.
Right. So that's something else to keep in mind. Let's see. Let me very smoothly look at the other page of notes to remind myself. Oh yeah, we had sort of a laundry list of a few other things.
Yep.
Clearly, I am the one to talk about estate and gift tax planning and consequences, but I want to give you the opportunity to talk about that. So if you'd like to, you go right ahead.
Okay, I'll take that one.
Okay.
Just this time.
Go ahead, just this time.
Yep. So the annual gift tax exclusion is $15,000 this year per donee. And of course, if you're a married couple, you can split the gift with your spouse. If you split gifts, you are required to file a gift tax return. Just want to point out that annual exclusion is going up to $16,000 per donee next year.
Okay. 529 plans. Now that's something we've talked about more than what you've talked about several times in various videos. We've posted some things about 529 plans. That's something that folks always need to be looking at. If you haven't already started a 529 plan for one or more of your children, it's something to think about. It's really something you can't think about too early, but you also don't need to get too wound up if you feel like you've waited too late. Maybe you haven't.
Yeah. The Mississippi has a couple of different options. They have the savings plan and the prepaid plan. The savings plan can also be used for elementary to high school expenses for private schools. There are some limits on that, $10,000 per year for those expenses, and then the tax deduction for Mississippi is $10,000 for single filers and $20,000 for joint filers.
And that's a Mississippi specific deduction. That's going to be a difference between your Mississippi and your federal. It doesn't give you that immediate deduction on your federal return, but it does for Mississippi.
Right.
Let's see, what else? Well, I know this is something that I know you've talked to several people about recently, some of our actual specific conversations, and you have a note here that says, 2, consider any updates needed to insurance policies or beneficiary designations. This is one of those things that's easy to forget about, right? Because it's the sort of thing that that doesn't, if you don't have an event that affects those things in a year, you're not going to think about who your designated beneficiaries are.
And a lot of times people don't think about it even when there is an event.
Well, that's true.
Once that designation form is filled out, most people don't go back and revisit it, but it is important to think about, especially if there's been an event that would change the way that you'd want to designate your beneficiaries. Just a reminder that those designation forms do trump whatever you have written in your will. So if you're updating your will, be sure to review those forms as well.
All right, and just a couple of other items. We talked about this. I'm not sure if we've done a video on this recently, but I know we were talking to a client recently about converting a traditional IRA to a Roth IRA, which is, in colloquial terms, referred to as a what?
Backdoor Roth.
Backdoor Roth. Okay. So tell us about the backdoor Roth.
Sounds super interesting.
It sounds super
when you
interesting.
put it like that, right?
It does.
So Roth IRAs, of course, have income limits. If you make over a certain income, you're not allowed to contribute to those types of accounts. And the reason that a lot of people prefer Roths is that when it's time to take out your retirement, those funds are tax-free. Which is different to a traditional IRA. Traditional IRA, you would pay tax on the retirement income as you pull it out of your account. So that makes Roth IRAs, super popular, right? However, there's that hang up about, hey, I've made too much income to contribute to a Roth. So there's this super secret, which is not really a super secret thing, called a backdoor Roth.
It's not, you could
it
Google
sounds
it.
super
You
secret,
could Google
though, right? You can Google it. And basically what happens is you contribute to a traditional and then convert it to a Roth. And there are some limits on, is that a taxable event? Maybe, depending on your circumstances. Do you already have funds in a traditional? So it's a case-by-case basis, but it's available and something to think about as you're, just thinking
Yeah.
about your retirement contributions.
Right. It's certainly something that you need to talk to an advisor about, whether that is your retirement advisor and money manager or your CPA. You do need to make sure you're getting professional help in looking into whether you can do that and what the benefit may be to you. So a couple other things that I wanted to mention, if I might. Thank you. First, just cash flow. As we're getting toward the end of the year, and we've talked about things, we talked about charitable contributions in our last video, but just thinking about cash flow and trying to minimize any potential tax penalties and interest, you want to hopefully have already looked at your withholding. If you're making estimated tax payments, hopefully you're already on a plan. It may be that as we get to the last payroll or two of the year, and we're pretty much there now as we record this, or you're heading up toward possibly making some other estimated tax payments either at the end of the year or up to January 15th, which is the normal deadline for the fourth quarter. You need to just think about whether you are where you need to be, if you're paying in what's required. If what is required based on your particular situation is less than what you will ultimately owe, that's great. If you are in a safe harbor or some other situation that is going to protect you from penalty, but you do just want to do some cash flow planning around that, whether you're paying estimates, whether you're managing withholding at the end of the year, it's something to take one more look at before the end of the year, if you can. Lastly, this is something we thought about starting with. We thought we'd hold it till the end. As we record this, most of what we are all hearing in the news is that the Build Back Better plan, and we've done some video on potential tax changes. We did a quick post when the House passed a version of the bill back in November. But anybody's watching the news over the weekend and today, again, as we record this, it would seem that most everyone expects that Build Back Better will not make it out of the Senate this year. What does that mean for next year? We don't know. Now, is that a guarantee? Again, it's not. As we record this, that's what everybody's saying. This has been a couple of years where weird stuff happens. So who knows what may, see, I did the same thing. I did a camera turn. Who knows? But all of the things that we have discussed and others have discussed in terms of significant tax changes for this year do not seem to be coming out of the Senate this year. Again, you can turn on any news channel today and they're talking about it. Things change all the time. Who knows what's really going to happen? I'll believe it when we get to January 1 and nothing has happened. But it seems right now that the expectation is we will not see that significant package of tax changes. And of course, there's a lot of other stuff to that law, but we're of course focused on the tax changes here. Doesn't look like that's going to happen this year. What else we got? That's it, right?
That's it.
All right, that's it. We are not going to belabor this. We're going to bring this to a swift conclusion. We will hope to maybe try to do one more video, maybe a little more casual before the end of the year. Maybe talking about a technical topic, maybe not. Maybe just reviewing our own year and sharing it with folks out there who may be interested. In the interim, if you need any help with any of these or any other issues, seek the help of a professional advisor. If you don't have an advisor or need to talk with a new advisor, hopefully you know how to find us if you're interested. Anything else we need to say?
I think that's it.
Okay.
This was us talking about year-end planning.
No, this was still us.
Still us.
Still talking.
Still talking
about year-end planning.
Year-end planning.
Again. Part 2. Okay.
Yep.
So that's it. Thanks everybody, and we will catch you in the next video.